All right, you guys, I'm Phil Town for Rule 1 Investing. I want to talk to you for a second about one thing on the balance sheet called assets, right? The balance sheet's one of the big three financial statements. It's broken into three categories: assets, liabilities, and equity. And assets are very, very important. So let's talk about what's an asset, right? So if you're at home trying to figure out your balance sheet, your asset, if you listed all your assets, it wouldn't necessarily be your ability to throw, a really good softball pitch. What an asset is something that has value in the market. Not that yours doesn't, but let's say it does, that we just focus on the things that we can sell for some kind of money. So that would be your house, your car, your baseball mitt, gold jewelry, diamonds, whatever you've got out there that is a valuable thing would be considered an asset. Now, assets are broken into two different categories. There are current assets, which are things that you can turn into cash and plan on turning it into cash, fairly liquid, within 1 year. Those are called current assets. And they include things like cash in the bank, investment that you've made in stuff that's, available to come back into cash within a year. It also includes things like accounts receivable that you're going to get paid within a year. So all of the assets that you've got that are going to turn into cash in 1 year would be called current assets. Now you got another block of assets, which would be long-term assets. So in your home balance sheet, your current assets would be your bank account. That would probably be the main one. That's the bank account, maybe things you've got that are stocks that could turn into short-term investments. You can call those current assets. Now, long-term assets are things like your house and your car. These are things where you won't be turning it into cash anytime soon. So that's where everything else goes. So current assets and long-term assets add up to total assets. And total assets on a balance sheet are one half of what balances. The other half is called liability, which is what you owe, plus your owner's equity, which is the difference between your assets that you own and the liability that you owe. So when you add up liability and owner equity, it should equal assets. Now, Rule 1 investing, we look really carefully at the balance sheet of a company and make sure that that balance sheet is getting better over time, that it has better assets and lesser liabilities, that the debt is low. We really love low debt, so low liabilities, and we have really good equity growth. In fact, equity growth is the key to understanding the long-term value of the business. So you guys, if you like what you see in here, subscribe to my channel for more content. I'm Phil Town. Time to go play.